So you want to think of this as your outline. You want to figure out how much money you think it's going to cost you, how much money you think you're going to bring in, and then through the life of the project or through the fiscal year of your business, you're really focusing on, are your projections correct, right? So the whole time you're in a budget, you're basically just saying, did what I think it was going to cost me, actually, am I on track with that? Okay, so for our budget, I have to submit it to my board at the end of June to go into effect July 1. And then every month I tell them, okay, here's what I thought I was going to spend. Here's what I actually spent. Here's what I thought we were going to take in. Here's what we've actually taken in. Okay. So it can be as complicated or as simple as you need it to be, depending on what you're using it for. If you are doing different projects as part of your business or plan, you may have project budgets that would be specific to what you're trying to do that are separate from your operating budget. And we'll get into some of that. But you want to make sure that you take in all of your costs, okay? And this is where a lot of times, especially for people just starting out, you want to think that through what all of your costs are going to be, but also track all of your costs. So for a store to open, you know, you need electricity, you'll have to pay utilities, you'll have to rent a space, you'll have, so you'll have monthly rent, you'll have a utilities bill, you might have costs to clean the sidewalks if it snows, because depending on where you are, you have to clean your sidewalks. You also need insurance, right? So all of those things need to be taken into account. And that's before you've even bought any inventory to go on your shelves, okay? And then if you're doing a project estimation or you're doing a budget for, David, say a customer who wants you to fix their bike, you need to make sure that what you tell them the project is going to cost is what they're willing to pay. So for that, you would get their approval on the estimation. For a store, you may have to go to a bank and get a bank loan. You would want their involvement. Okay. So why do you need a budget? Well, first of all, if you're in the New Bedford 100 program, you need one because they want to know what you're going to spend the money on. But it's also an essential part of securing project funding. So a lot of times before you even know you have funding for your project, you need to submit a budget, because it tells them that when you need the money, how much money do you need and when do you need the money. It also helps you with cost control, okay? So if you know that every month you're comparing your actual costs to your budgeted costs, it helps you know when you have made a profit and when you are still breaking even, okay? And then if you're consistently making a profit, then maybe there's your opportunity to grow. And the third is it has a direct effect on your financial viability. So when somebody is looking at your company's financials, you give them a profit and loss statement, but you'd also give them a budget with actuals to date. So how often did you stick to your budget? Okay. So when there's two different kinds of budgets that we talk about all the time. Okay. The first is a operating budget, and that is what it costs you to actually run your organization or run your business. Okay. The second type is a program budget, and that's specific to a program. I use this slide for my grant class. So a program in a grant or a project that you're doing, okay? you have to be able to demonstrate where the funds are going and what they're going to be spent on. So it allows the person from the outside, whether it's a bank that's giving you funding or a granting organization that's going to give you a grant, it shows them what you think your financial viability is. You know, at some point in there, you're going to project out that you're going to make a profit. And then how are you going to invest in that profit? So when you creating your budget, okay, the main priorities have to be to complete whatever your project is, whatever your business is, okay? So for a mobile bike repair, you need to make sure that you have a vehicle to allow you to be mobile, right? And you have the insurance so that you can operate that vehicle, and that you have the supplies that you need. So when you get to where you're going to, that you have the right equipment, right? Anything else is nice to have, but it's not maybe your top priority, right? And this is, as you go through the process, this is how you figure out kind of where do you need to focus your funding if you don't have enough funding for everything. Okay, and because if you don't have money, you cannot do what you say you want to do. Okay, so quality and deliverable deadlines can be jeopardized if there's not enough investment. So these are the three things that I think are very helpful when you're getting ready to prepare your budget. Check your project requirements, what you want to do against what available resources you have. Okay. Look at the time, the window of time that you have. Okay. And if you have any historical data, if you know somebody who's done something similar that they're willing to share, or you do some research, where are some budget loopholes? Where are some areas where people have had issues with their budgets in the past? Okay. So, like we said, when we start to develop the budget, we need to identify the costs. We need to identify the revenue. Okay. And then talk about how you're going to sell that. Okay. Remember, a budget is both an internal document and an external document. So for most of you, it's an internal document to keep you on track, but also if you plan on taking advantage of the New Bedford 100 programs, you also need to be able to explain to them where your budget comes from. And so having some prepared talking points or a narrative is helpful. If you're ever applying for grants as part of your business plan, you would need that for your grant narrative. And I always recommend having somebody else review your budget, especially if you're not comfortable with like an Excel spreadsheet. You want to make sure that your math is correct, because if they find an error in your math, then they're going to be concerned that you'll also have errors in your business. So what goes into the budget are specifics to your project or program, right? And what you intend to buy, what are your expenditures? And you want to show exactly what funding will be used for. So if you have a loan from the bank, you are going to use that to pay for your initial supplies that you need and for your rent for a year. And that's the plan for that. And then as you sell the service or you sell the items in your store, that funding will be reinvested into replacing the stock that you need. Okay. You want to list any costs or funding sources outside of any kind of grant proposal that you have or loan that you have. Okay. And written justification for funding is valuable. Okay. That's your selling story. Okay. And a solid budget paints a clear picture to the funder that you have thought through all of the costs, you understand what the costs are, and you have a plan. So the budget paints the numbers picture, and your narrative tells you how you arrived at it. And it also gives you that chance to explain why you think, you know, the rent is we're basing the rent in this budget on market research. You know, it may come in a little bit higher, a little bit lower, but we found that market research for this area says this should be what the rent is. It kind of helps put things into context. Okay. So I've got an example here. This is for a grant that somebody had written, and the travel expenses were $3,000. And then this is how they came up with $3,000, right? 3 staff members have to drive this many miles. They're reimbursed at the IRS rate. Okay. It would be the same thing with utilities, right? The utilities for this building on average come out to, you know, $75,000 a year. This is based on checking with the local electric and gas company and looking at bills for similar buildings, doing similar business. Okay. It just shows that you've put some thought into this. Now, for a business proposal, or if you're submitting your budget for a loan, you wouldn't necessarily submit the narrative with it, but it's important talking points for you to have when you have to go in and explain why you want the loan. If you're applying for a grant, they're going to ask you for that right in the grant application. So here's an example of a 3-year budget, personnel as salaries and benefits. And this is the other thing, when you're putting together a budget, remember that you have to pay benefits, or at least account for the benefits. You may not be able to offer much, but you do have to take into account things like, in Massachusetts, you have to pay sick leave, you know, paid time off, and unemployment insurance. So whatever you're paying the person, there is other additional costs that you as the business owner have to incur. So you want to make sure you're accounting for that in the budget. And then we have other things such as marketing, supplies, materials, food, travel. Over the 3 years, not everything is in every year. So you come up with a year 1 budget of $269,000 and a 3-year budget of $749,000. Now, if you're applying for grant funding to get this business going, they will sometimes allow you to do indirect costs. So those are the costs that may not be directly related to your program budget that you're putting in for them, but they are to your overall operation. Okay. Pay attention to direct and indirect costs, because you want to be accounting for those costs in everything that you do. If you're getting your business off the ground and you're providing in kind, maybe you're not taking a salary, make sure that's accounted for. If you're submitting a grant, make sure you understand what they expect from you. You want to provide an honest and real idea of expected revenues and expenses. Okay. It's always very good to be cautious on revenue and overly generous on expenses. Okay. I'd rather over budget on expenses and under budget on revenue than over budget on revenue to get a balanced budget and under budget on expenses, and then I have to somehow make that money up when I realize the numbers are not working out. So when we talk about direct and indirect costs are exactly what it takes for you to produce the goods or service, right? So your direct costs would be what it costs you to buy the products that are on your shelves or to actually fix the bicycle. The indirect costs are the overhead of what it costs you to operate the business. So that's your rent and your utilities and your insurance, okay? I'm not sure if New Bedford 100 is allowing indirect costs in their grants. I know for some of the FRACC grants they do. But I believe they do, but it's something to keep in mind when you're doing this. So some examples of direct and indirect costs would be the salary of the people directly doing the program, any materials, any travel, and any supplies. Indirect costs would be salaries of people who are not necessarily working on the project. Maybe you have somebody answering the phones in your office, okay? You also take into account rent, utilities, and any kind of business service and administration costs. All right, those, what we call the cost of doing business. It all needs to be accounted for in the budget. If you're doing a grant, just quickly matching funds. A lot of times they don't want to give you funds, so you have to put something in that could be in kind or it could be real dollars. It can be done through real money or fundraising or discounts. You probably wouldn't do volunteer activity in a program or a project budget for a business, but depending on the grant, you may be able to count some volunteer activity. And make sure you get everything in writing for discounts and donations. Some things you might get donated to start your business: computer, software, furniture, maybe a meeting space, an answering service, legal expertise, tax or business advice. So if you have a friend who's a lawyer who helps you get the business incorporated, and he does it for free to help you get your feet off the ground, you need to think about down the road still having a legal line item, because you may eventually have to pay a lawyer for something that comes up. Okay, just because they did it to start doesn't mean they're necessarily going to continue to do it for you for free every time you need it. So how do you create a project budget? Before we start in this section, we've picked up a couple of new people. Are there any questions so far? I don't see any hands up, so I'm going to keep going.
Nope.
Okay. So we need to determine what this project or what this business is going to cost you. And I focused on project, using the word project, because a lot of these will be budgets for projects that you're coming up with, but these same theories apply to a whole business, right? You need to know how much funding you'll need for the startup and for continuing operations. Okay, so what do I need to get this business off the ground and up and running? And then what do I need on an annual basis to keep it going? Are there any local funds that I can leverage against this? What is my project schedule? Am I starting this out very slowly where it's a word of mouth and I'm going to just take a couple of clients to begin with as I build up my reputation? Or is this something where it's something like a store where I have to have an open date? Okay, so my project schedule is I need to get this store up and running. And then if it's a long-term project, will inflation impact your project? You should always be building in and taking into account that costs are going to rise. Okay. So you want to make sure that you can answer these questions as you're putting together your project budget. Can you determine the project and its end goal, right? What am I trying to achieve? Are there any ground rules, constraints, or assumptions you should consider? Like, what are the legal, have you looked at this with the legal ramifications, right? Do you have sources of data? Is there tasks list that you can use? So if you took the project management session, then we went over a lot of things that you can create in order to give you an idea of what you need for your budget. Okay. At the end of this, the last thing we're gonna cover tonight is estimating methodology. There's, 4 or 5 different ways that you can estimate. And they have different uses, so are you using the right one? Do you know who's gonna work on the project? Is this something you can do yourself? Do you have to bring in other people? What's that gonna cost? If you need outside resources, what are their rates that you're gonna need to incorporate in to complete the project? Can you compare your estimate against best practices, right? If you're creating a new kind of business, there may not be any industry standards for you to compare to. But if you're opening up a market, you have a pretty good sense of what people around here will pay to go to the grocery store. Okay. What is your contingency reserve? Okay. Just like when you budget for your home, right? Things go wrong, things break. Just when you think that you've got some money in the bank, the dishwasher breaks. The same thing happens when you're doing a budget for a business or for a project, right? You need to have contingency. You need to have some backup money put aside to use for those times when things beyond your control happen. Do you need anybody else to help you in estimating or budgeting? Right? Are there other people, other team members, or other people who can help you? Are you on the same with project stakeholders? So if somebody has hired you to do a project for them or to commission art for them, are your costs and your ideas in line with what they want? And then as you go along, you want to compare your budget with your original estimates and reconcile, so that you should always have a true up of where you are against the original estimate and the actual budget. So the easiest way to do this is to break down the project into tasks and milestones. And then once you understand everything that you need, you can price it out and know how much you're going to need to have on hand. Okay. You want to make sure you take everything into account. It's better to overthink this and assume that it's going to be more expensive than it is to miss something and then not have enough money. I'll run columns, right? The tasks that I need to do and what the costs are that are associated with that task, and then I'll calculate the costs. And then we'll make sure you take into account contingency and taxes. Okay. If you're selling something, you're going to have to pay sales tax. And then if you are providing a service, you may also need to pay sales tax on the parts that you use. Okay. So 10% is a good contingency to have. And you should know whatever the tax rate is, 6.25%. should be your conservative on holding your taxes. And then if you are working with somebody who's hired you for the project, get their approval. If you're the boss, make sure that you've reviewed it and that it's realistic. I like to bounce it off somebody else. And then that's your final kind of approval step. Part of what you need to do to set the budget is to understand the objectives that you're trying to do. Okay. So if you understand the objectives, then it makes it easier for you to actually put the budget together. And so we talk about SMART technology: specific, measurable, achievable, realistic, and time bound. Okay. And then look at your project scope. So if I am going to try and create artwork for a client, and I need to produce at least 2 paintings a week for everything that I have, that means I need to work so many hours a day. I need to have the canvases, I need to have the paint. and I can't take on any more work, right? You have to set boundaries, you have to set deadlines. Take stock of the resources. What do I need to have on hand for what I want to do? How long is this project going to take? Remember, time is money, okay? So when you're thinking about your time, which is very valuable, be realistic on how long it's going to take you to do something, okay? It's not an infinite power. You can't just charge them for 25 hours of work if it takes you 7. But if it's going to take you 7, then make sure you're accounting for that, okay? And then you want to make sure that you stay focused on your goal, right? If you're opening a business and you're going to sell items in your store, then stay focused on what you know will sell. You don't want to start diversifying too quickly, and then you don't have any people who are committed to coming into your store, and then the people who come in can't find what they're looking for because they thought you had it and you don't. So it's better to start small and work up. And it's also easier financially to start small and build up. One, because it's easier for banks to trust that you know what you're doing if you have a track record and can show that you can deliver on this project. And so we talk about work breakdown structure, which is one of the things we talked about in project management. You really need to think everything through, because the biggest pitfall that business owners have, especially if they're trying to do project estimation or if they're starting a business, is they may not fully comprehend how long things are going to take and how much their time is really worth. And at some point, it may not be worth it for you to do some things, and it may be better to hire somebody because you may be capable, but it's going to take you too long, and it's going to be much more expensive to do it that way. So make sure you look at the level of the deliverables on what you need to do. And resources could be training, it could be equipment, it could be space, it could be research, could be professional services. Everything that you need to think about. Do you need to outsource and bring other people in, right? Do you need to hire an insurance broker to shop around and get you the best price on the different types of insurance that you need? And when you estimate, think about, if you're an artist, it's the individual piece. If it is something like the bike, how long, every repair I would assume would be slightly different, but the basic things that you'd be doing, kind of how are you setting your pricing for that? Okay. And that's all estimating, right? You need to come up with a price. It's like with items in the store. You're going to buy them for a certain price. You have overhead that you need to cover. How much can you charge for that item and still sell it? Because if it's too expensive, nobody will buy it, and then you're stuck with the product. But you also need to make enough to cover your expenses. So how do you find that sweet spot on your pricing? And all of that, it builds into your budget. Okay. If you know somebody who has a similar business who's willing to talk to you about kind of what they've been through, or if you've done a project before, maybe for another company, and now you're doing it on your own, going through those historical data can help you make sure you haven't missed anything. Okay. Overlooking costs is a big pitfall, right? A lot of people work for somebody else and then decide to go out and do this on their own. And you may not have a clear understanding of how much all of the parts that you need and all of the supplies that you need and are really gonna cost you, right? When you all of a sudden have to go to Staples on your own and buy the pencils and the pens and the pads of paper because they're not just in the supply closet, all of a sudden you start thinking about the fact that, okay, I need to think about if I need invoices or if I need a receipt book, I have to go to the store and buy that. Okay. And you always want to have a contingency fund in your budget. Tools break, schedules change. Who knew we were going to have a pandemic that would have shut the world down for a year and a half? Okay. Anywhere from 5 to 10% of your total budget should be put aside for contingency. In the best case scenario, you don't use the contingency, the whole year went off without a hitch, the project went out without a hitch, and you end up reinvesting that money back in your company, okay? So it's not like you lose the money, it's not like paying insurance and then not having an emergency happen. A contingency in this case is sitting in your bank account, it's part of your budget, but it gives you a buffer if something goes wrong. So you want to think about each line item and what do you need? What is the cost of what you need? When do you need it, right? Do I need to buy everything for the day we start? Or can I buy some things now, get the project started, and then buy other things as I go down the road? Because that will help you also with your cash flow, right? If I need to have everything at once, then that's fine, but that means you need all of your money up front. And remember, if you're borrowing money, you're paying interest on it. So a lot of times you don't want to draw it down until you know you need it. Okay. And banks like to know when you expect to spend the funds. If you are more than a single person on the organization, who is responsible for managing the budget, right? If you're the sole owner and chief cook and bottle washer, then you're the one who's responsible for this. If you have a bookkeeper or somebody who is handling the financial side of your business for you, then you're working with them and they're keeping an eye on the budget and bringing things to your attention. Okay. You want to know how you're going to pay for each item. All right. At the end of the day, the budget has to show that this is what it cost me to do it. This is how much I paid. This is how much I could charge. So this is how much I made. Okay. If you have individual, like smaller projects, you can total them up by either departments or projects. And you want to track your actual cost to your budgeted cost. So step one is that we create the budget. And we have all these ideas of this is when we need the money, and this is how much we need. And then you always want to have a column next to it that's your actual costs. So we said that it was going to be $5,000 for canvases this year. We're projecting that I need to spend about, $350 a month for canvases, but they went on sale at Michael's and I bought a whole bunch of them. So I spent $600 in 1 month, but I've got enough to get me through 3 months. So my actual cost for that month will be higher, but I'm still within my budget. Okay. Now, there are tools out there that can help you manage your budget. The very most basic one is an Excel spreadsheet, right? You put all your budget columns in and you then keep track of changes that you need to make. There's also software out there that can help you. It is expensive, so I'm a big fan of an Excel spreadsheet. And, at a minimum, you probably want to get something like QuickBooks to manage your business expenses out of. And you want to monitor your spending, okay? As you go along and as you have this budget document, you're gonna start getting into the mindset of the business, right? I'm doing what I have to do, the business is running. But make sure you're keeping an eye on those costs, because maybe you don't notice it, but you know, bike tire in the things that go inside the tire start getting more expensive. And all of a sudden there's a rubber shortage and those costs have doubled. You've just been going and going and going because you got more business than you can handle. All of a sudden you realize you've spent 3 times as much money on tire supplies than you had budgeted for. Okay, so you want to make sure you're keeping an eye on it before that number gets too big. And then have a plan for what you have to do if it goes over or under. Can you say what we saw a lot during the pandemic, due to supply chain issues, our costs have had to rise, right? We are sorry, but now this is what it costs. If you're in a contract with a customer, can you ask them to readjust the contract that you have with them, because costs have gone up and it was unexpected, right? And some may be a fixed cost, you can't do anything, so you have to make some decisions, right? But if you're monitoring what you're spending right along, you'll be able to see this before it becomes a huge issue. You always want your client or any project stakeholders to sign off, because that will give them, the budget gives them a picture of where the money's going. And if they sign off, you've got proof that they knew that this was what it was going to cost, and they have agreed to be a partner in that. Okay. Now, if you put the time into your budget at the beginning and you've really thought through all the details, you can always roll up the line items to make it easier to look at. But if you put the time in at the beginning, it really will help you get through your entire project and stay on track, okay? And it assures that anybody that you bring in, any team members or any subcontractors that you bring in, know that they have the resources that they need to finish the project, okay? And if you have put the effort in and done the contingency properly, you have the way to tackle those unexpected costs. Maybe not have to go in and say to the client, yes, we have had some unexpected costs that come up, but they're within your contingency. So we are set to be on track to complete this project on time and on budget. I bet no more contingency. So some categories you want to think about is, first of all, human resources, right? You should be at a minimum planning to pay yourself. And then other workers, whether they're temporary, full-time, part-time, whatever you need. If you need to any traveling expenses, right? Do you have to pay your employees mileage to go to and from work? Do they just come to one location and there's no travel expenses, right? So depending on your business, that one may or may not apply. Whether or not they need any training or conferences or workshops, or, you know, what else might they need to do? Materials, right? What software or hardware or equipment do you need? And this is somewhere where it's good to budget in for something like QuickBooks, so that you can invoice your customers and take money in, right? And keep track of your expenses. Well, QuickBooks costs you money to use. You can either buy the desktop or you can use the online version. I think I know for nonprofits, it's $75 a year. I think for a for-profit business, it's probably $150 a year. So it's something you want to include, right? If you have to do any research, professional services, whether you legal advice, market research firms, consultants, capital expenditures. So materials are things that get consumed or used on an annual basis. Capital is your equipment or expensive things that you can capitalize out over time, right? They were expensive to buy, but you're going to capitalize them out over a period of time because you're not buying them every single year. And then we talked about your contingency fund. Now, in order to do your budget, you need to understand project estimation, because unless it's something like a store where you know you're going to buy the items and you're going to sell them, anything that involves any kind of project work or piecework or artwork or anything like that, you need to estimate how much you're going to charge for it, right? And so this is where you take in account the time, cost, and resources required to complete the project. Usually this will happen during the project planning phase, or if you're setting up a business where you have a certain set of things that you're always doing, like with the bike repair, where there may be some common things that you just set the price for. And say, if you want your brakes replaced, this is so much. If you want the bike painted, it's so much, but anything else that comes in that's unusual, you would look at the project and decide. If you're an artist and you're selling your artwork, then you ask the client, it's a conversation with the client as to what they want. Then you have to figure out how much time it's going to take you to make what they want. And then what materials you need, and then how much do you need to charge them. The more accurate your estimates can be, the better you have set the table, right? You've set those expectations, okay? And I like to provide it in writing, because that way you cut down on miscommunication and misunderstanding. In fact, when we go out and request project estimates for projects that we have at my work, we are required to get them in writing. Now, if this is going to become a large part of your business, then there are tools that you can use, digital tools, that will help you come up with estimates. If you need to have team members, I would definitely suggest that you get some sort of template. If it's just a simple thing, you can probably just keep track of it on an Excel spreadsheet. But you want to be able to see all the resources you need for the project. If you don't need to assign team members, then you don't need to communicate in the tool. But it is a good way, if you have one, to do internal and external stakeholders. You can use a project estimate template to set your timeline. And you can then use it to replicate it for future projects. Okay, so if you get commissioned to make a specific piece of artwork, it's going to go on someone's front lawn. You put all the time in the future. Now, okay, for a lawn ornament that's metal that I have to make again at a bare minimum, this is what it's going to cost me to do, because this is what it cost me for this project. Okay. You should go back to your project estimates when you're done and see where they worked and where they didn't work, so that you can do a better job with those in the future. At a minimum, when you're doing the project estimate, though, you need to list out the resources you need, the costs, what are your labor costs, hourly rates, estimated hours, start and end dates, okay, and then a total. So we have hired a small engineering firm to look at a piece of property for us. They give me their rate sheet, which tells me how much each of their principal people make. They give me an estimate for each of the steps, so they have to do a survey, they have to do a topography map, they prepare my documents to go in front of the zoning board, and they will create a full site plan for them. And each of those steps, they give me the cost for each of those steps. And they'll tell me how long they think each one is gonna take. All right, so I then walk away with that document. Now, it can be that they just put it into a Word document, or you can use fancy programs that will generate one for you. But at a minimum, that information is all needed to give to the client so they know what they're gonna have to pay. If there's any information that you need to track, make sure you have a way to track that, right? So if you've got 3 employees working on a project, where are you tracking their time, right? Because the payroll system is only going to track how many hours they work in a day, but it may not track what project they're on, depending on how you have it set up. So this is where you want to track, when are they actually working on this project? You should prioritize what needs to get done. And you want to make sure you include a start date and time, so you know how long approximately this will take, right? Because those are all billable hours that have to be accounted for in the budget, and make sure that all of those budget numbers make sense. Okay. And you also want to be held accountable. You have a fiduciary duty to make sure that you are using your time, and or if you have staff, their time, the most effective way possible. So your budget is built on work that you say you're going to do. So it's unrealistic to think that every single minute of every single day, your employees are going to be doing something that is going to make you money, right? So how do I manage what I'm going to pay them versus what they're actually going to bring in for revenue from me? All right. So what we like to do is have create your own template if you don't want to pay for one. And make a list of all of the costs associated with the project. So most companies will have a list of everything they do, and then they just plug and play depending on what this project needs. Separate them into categories, whether it's phases, right? So going back to my garden sculpture, first I have to make the sculpture, then I have to get the sculpture to your house, then there's an installation at the house to make sure it doesn't fall over or break or get stolen, right? So some sort of permanency. And so all of those fall through the timeline and have costs associated with them. And so this is now your ability to track what those costs are against your estimate and your actual, right? So you don't know by the time you actually go to move this project how much the truck is going to cost you to move the piece of art. But you have a rough idea that to get a truck to come over and do this, and it's 35 miles from your studio, how much it's going to cost. All right. The more you can account for those costs, the more profitable your business will be, right? Because you need to account for the expenses that you have so that you can make sure that you are charging enough to be able to cover those. If you have a team, it's always good to regroup with the team and make sure you're staying on track with the costs. And then adjust as needed. So we'll meet with our engineering team 3 or 4 times, and I'll use their project estimation template as a checklist for where we are within the project. Okay, this is what they said they were gonna do. This is what they ballparked it was gonna be. I just got the bill. It was actually a little bit less, so I'm a little bit ahead on my budget, and they're a little bit below where they thought it was gonna be. Okay, so we're looking at it from 2 different budget aspects here. I'm looking at it as the client, they're looking at it as the business. But we're both tracking and using the estimate that was given because we both used it to build out that cost in our own budgets. Now, there are 5 different ways that you can handle doing project estimation so that you can put it in your budget. We're going to go through each one of these, kind of look at the pros and cons. This is where we said it may or may not apply to each different type of project. You may end up using different estimations for different types of projects, or you may find that one works really well for your business and that's the one that you use. So bottom up, you take the individual parts of the project and total them up. Spelling error there. Okay, it's not taught, it's total. This is one of the best and easiest ways to do a project budget, right? So you take all the parts of the budget and you add them all up. So if you are 100% confident that you know everything that has to go into the project, this is the way to go, right? The downside to this is that it takes time, right? In order to have this level of detail, you really need to spend the time to pull it all together. Okay, so that isn't necessarily realistic for everyone. Okay, but if it's something that you maybe do all the time and you are absolutely confident in the cost, then bottom-up estimation will work. If you're not, you can always do top-down estimation. You know how much you know how much it's going to cost you, and now you split that up across all of the tasks. Okay, so this is the complete opposite of the bottom-up approach. So you start with the total budget and you break it down. Okay, so this works well when somebody says, you know, I have $3,000 to renovate my bathroom. What can I do for $3,000? All right, for $3,000, you can paint and you can replace some fixtures and we can make it look fresh, but you're not gonna gut it and you're not gonna redo the whole thing, right? The disadvantage here is it's loose estimations, right, from the start, because you already know how much money you have to spend, so you're kind of just saying, well, this is how we're going to break it up. And it really is difficult because in this way, you don't really understand the scope of work and project plan, because you're basically saying, I have X amount of money, kind of now make up the scope and work plan. And then it's very hard to hold accountable on this, because how do I measure if you stayed on target in the tiles if I never gave you really a budget for tiles? We just picked them because they fit within the $3,000 budget that I said. Okay, but if the person comes in and you're in that kind of thing, like I will spend $5,000 on this piece of art, but no more. Okay, well, now we know what the total cost can be, and now we back out everything else. So bottom up, top down. The next that we're going to cover is analogous. And this is where you use analyzing data. Okay, so here's where you maybe did this for another company, you're going out on your own, or you have done similar projects in the past, maybe not exactly this one, but you know what they cost. So you're going to take similar projects and see how much you can use their existing data to figure out how much this project will cost you. Okay. Every project, if you own a business, chances are most of your projects are going to be similar because they're going to be within the scope of your business, but not everyone is the same. And so you want to be careful not to make decisions based solely on similarities. But you should be able to find some common ground. Okay. So you also want me to make a sculpture for your front lawn, but you want me to use steel instead of iron. Okay. So I know how long it took me to make that design, but the cost of steel differs greatly from the cost of iron. So now I have to figure out. I know how much time it took me, that the metals are similar to work with, but now really the only change is in the metal, in the raw material, and that's, I can go figure that part out. It's not as accurate as bottom up, but it is super quick, right? You know, that project cost me $3,000. I told them that it was a $5,000 project because that's what I made for doing it. You know, we're going to say that iron is a little more expensive, so I'm going to say $6,000 for this, right? It's down and dirty. It's like the back of the envelope kind of estimate. It has its place. It works well for some things, but it may not work for every project. The next one is parametric estimation. And this one is taking the analogous and kind of putting some science behind it. So you take costs from other projects, but you also do some research and comparison and put some, using multiple data points and finding out averages will get you closer to kind of the true cost that you're going to see. It is hard to find useful data points with a lot of different projects. So this one is a little bit harder to wrap your head around, and it's more accurate than the analogous, but still not as good as the bottom up. All right, and then we have the kind of best of all worlds, right? This is where you take your best case scenario, your worst case scenario, and your middle of the ground scenarios and estimate them to an average. Okay, this is a pretty like pragmatic approach. You know what the first case scenario, you know, your best case scenario costs are, you know what your worst case scenario costs are, you know what your average project costs you. So you take out your weighted average, and this gives you a realistic cost estimation. The advantage is it does reduce your risk because you've already taken into account the worst case scenario, right? So you've already figured out how much the most expensive thing is going to be. There really are no true disadvantages to this, except that you do have to create 3 different estimates to kind of figure out where you want to be, like best case scenario, worst case scenario, and then the middle of the most likely case. You know, if only one thing goes wrong, this is where we end up. So it could take a little bit longer, but I would say the 3-point estimation and the bottom up are the 2 that are the easiest kind of ones to use, especially first, when you're starting out with small projects. Now, we're going to talk about some of the business financial analysis issues, some things that banks may ask you for, some things that you kind of need to know if you took the a couple of the other classes we talked about these. You should know what an income statement, or you may also have it referred to as a profit or loss statement is. It shows, what you're making as a profit or what you're taking as a loss, right? Your balance sheet will show what your assets are and what your debt is. So if you've bought equipment, it'll be listed on your balance sheet as an asset. And if you have loans out, they will show up as debt. Okay. Cash flow statements show how cash comes in and goes out. Okay. These are three things that any bank is going to ask you for in order to do a loan. And for a grant that is going to a business, it would not be uncommon for the granting authority to ask you for these. So I used to manage the grant program for the co-working spaces, which is to for-profit businesses. And we would ask for all three of these, just so that we could get a sense of the viability of the company before we agreed to grant them some capital funding. Some other things that banks might ask you for would be a net profit margin, and that's just looking at the percentage of revenue you keep as net income. So if you're saying that the revenue from the company is $25,000, but you're keeping 10 of it, okay, then that percentage is how much is your net income. Your ratio of liquidity, right? So how fast could you repay your debts? How fast could you, if you needed to, could you sell all of your assets and repay all of your debts? Or are you at a point where even if you were to liquidate the company, sell all the assets, you would still owe your creditors? Okay. And that's a big one because they want to see how fiscally responsible you're being. Okay. And then accounts receivable turnover. If you are billing clients for work and they're not paying you, so in a store, they don't get to leave the store without the paying, right? That's the beauty of that. And a lot of times, if you go and get something repaired, you don't get your item back until you pay for it. But and some things we bill the client, right? Like my statue, I might send them a bill for it. How fast are they paying that bill? And what is my percentage of accounts receivable that are still out? Okay. Now, when you're a startup, you're not going to have these, but these are the types of things you talk about as a startup that you will be tracking so that the banks know that you're aware, and you will share them as you grow. When you go to a bank and they're looking for not only a budget, they're also going to want to kind of see a 5-year plan. So maybe you projected your budget out for 5 years, right? You can add a 2.5% increase across the board to everything. But they want to see that you are not just thinking about, 2023, or at this point, we're not just thinking about 2024, but you have a plan for 24 through 29. Okay. And it's a plan. It'll adjust as you go through each year. When you're going for funding, they want to know if you want debt or equity. Are you giving them part of your company, which would be equity, or do you want debt, that they're going to loan you the money and you have to pay it back? they're gonna wanna talk about terms and lengths of time this request will cover. Are you looking for a 5-year loan, a 10-year loan? You know, how long do you think you need? This is where we talked about the budget narrative. This is where it comes in. It's a detailed description of how you're going to use the fund. So you've given them the budget and they have a 5-year budget projection, but what does that budget mean? How does it translate into words? And then specifically, so a lot of times you'll be an existing company and you'll need to go in and get a piece of equipment. So you'll need $50,000 to buy this piece of equipment. So you're willing to take debt because you would get the piece of equipment for it, and you might need 5 years to repay it back because the business is doing well and you're going to double your output by getting this machine. And then you'll specify that you're using it to buy equipment and that you'll pay it back in 5 years. If you're using it to pay salaries or cover bills, they're going to want a little bit more of an explanation. They're going to be nervous that you may be starting down a slippery slope of not being viable. So if there's a reason you need to pay salaries or cover bills, be very clear what that is. Maybe it's that you're growing, right? I need to expand and bring on 5 new staff because I just got this great contract to fix all the e-bikes in Providence, right? But I need more staff and I've got to bring them on quickly so that I can get this contract up and running. Okay, so there's got to be some explanation that you provide. The budget shows the money, but the description is really telling your story. And then how do you plan to pay it back, right? What is your future plans? Are you paying off debt? Are you doing this to build up the business to sell it? Right? There are some people who actually love starting businesses and they'll start them and they'll get them up and running and then they'll sell them. Okay. But what is your plan? The budget will help you make your financial projections, right? If you know right now that your budget is $150,000 a year, you know, small business, and it's going to grow, I can, after year 1, my revenue will increase and we will be able to bring on more staff and expand. Your budget is living document for this year. Your financial projections are saying what's going to happen in the future. Okay, so how am I going to pay off the loan? How am I going to show you, if it's a grant, how am I going to show you that you made a good investment? If you have equity in your business, how will this generate profit to earn a return on investment for your investors? Or how will you repay the loan? Okay. Generally, unless you're a startup, and a lot of banks will handle startups differently, but they're looking for 3 to 5 years worth of income statements, balance sheets, and cash flow. Right? They want to see that there's been consistency, right? There's been a clear hand on the helm and running the business. Accuracy is key. Before you turn over your financial documents to a financial institution, you should have taken a really critical look at them and made sure that they accurately reflect your business, right? Because they are your financial resume. When you're looking at your business, you have a budget, but you also may want to set up weekly, monthly, and annual spending. Okay, so there are some things that you need to pay, like payroll, on a weekly basis. Things like rent on a monthly basis, and things like insurance may be an annual cost. All right, so when you're looking at your business operating costs, they're all reflected in the budget, but they're all going to have different timing. So you may pay all your insurance in January, and then you don't, so you've zeroed out that line item in your budget by February. You know you're not gonna be spending it, but your other lines you wanna track, right? You can use software that will help you with that. We had a lot of businesses during COVID that did not anticipate going remote, right? Their employees were supposed to be there, so buying computers for people became a business cost that they hadn't accounted for. So make sure that you're looking at your budget on a weekly, monthly, and annual basis. And the annual is the annual, right? You know that's coming up, but really the weekly and monthly basis. And make sure that everything is in one of those buckets. Using templates can help create an income statement, balance sheet, or cash flow. If you're using something like QuickBooks, it will generate all of those for you. Those are actually standard templates there. And then you can create custom templates for what you use for your personal business. Again, your income statement is your revenue sources and expenses over a given period. It shows your profits or loss. Your balance sheet shows how much equity you have in your business. So the business assets are what you own versus the liability of what you owe. And then assets minus liability equals equity. So your equity in your company is assets minus liability. And cash flow statements show, your income statement shows your revenue sources and your expenses, but it doesn't necessarily show when they come in. Cash flow shows when you come in. All right. Cash coming in greater than cash going out is positive cash flow. Okay? Cash going out greater than cash coming in is negative cash flow. And when cash is low, you need a contingency plan to access funds for solvency. Maybe there's a certain period where you have a lot of bills due, but you don't have a lot of money coming in. So you might have a line of credit that will lend you money for those low periods. If you've set up your budget on a weekly, monthly, annual basis, you should be able to identify when those slow cash periods are. Okay. And some of it you can adjust through changing your operating schedule, and some of it is just, it is what it is. There are times where we don't have a lot of revenue coming in, so we need to tap into the line of credit, but then when we come up on the upswing, we can pay it back. All right. Any questions that people have? I know we picked up a few more people, so I'm going to stop sharing the screen so I can see everyone. And I am happy to take any questions that people have. Everyone's still alive. All right. I'm happy to stay on. Thank you, David. Sorry I picked on you, but that business sounds really cool, and I could wrap my head around that. I'm happy to stay on if anybody has any questions, and if not, thank you very much. It's been a very interesting 3 weeks doing all of these classes, and maybe we'll see you again in the future.
I'm just gonna review my notes and like stick around as long as you'll stick around in case I have a question.
If you also, I'll put my email in the box. I don't know if you got it because I don't have you on my roster, but you may have gotten it. You can always email me if you have any questions.
Okay, well, we'll do that then. I'm always terrible with coming up with questions immediately, but I find later on, I'm like, wait a minute, oh no.
Yeah, no, believe me, I get it. So my email is in there. And I'm happy to take any questions that come up.
That was at BCC what?
.edu.
At bcc.edu.
I'm sorry, it's Bristol CC.
Bristol.
Trying to read what I typed. Yeah, it's Defrias at bristolcc.edu. I think bcc.edu was already taken.
Okay. All right. Well, thank you so much. And
No
I'll be in
problem.
touch if I have questions.
All right, thank you.